Welcome, friends, to the Probate Nation. I am Richard Ruddy, and I am the host of the show. This evening, we're going to talk about how to properly prepare the Virginia account for the estate or guardianship of a minor. In preparing the account, a famous golf expression called the mulligan comes to mind. This expression is named after a locker room attendant named John A. Buddy Mulligan, who was known for replaying his golf shots, particularly on the first tee. Our experience is that you will get fewer mulligan opportunities for the estate of a minor account. In fact, if anything can derail your administration of a minor estate more quickly, it is failing to properly account to the commissioner. So the goal of this show is to educate you how to prepare the account properly the first time. And to lead this discussion, we are pleased to have returning Brian Lowell from Grinnings & Lowell to walk us through the preparation of the account. Let me tell you a little bit about Brian. Our guest is co-founder of Grinnings & Lowell, a Fairfax City accounting firm founded in 2014. This firm specializes in Virginia inventory and account filings submitted to local Commissioner of Accounts for Virginia probate, estates, trusts, conservatorships, and guardianship estates. Prior to forming Grinnings & Lowell, he worked as an auditor for the Fairfax County Commissioner of Accounts. Please welcome Brian Lowell. Brian, welcome back. Thanks so much for taking the time to spend some time explaining how the account should be prepared. So let's move quickly to the guardianship account form for just a moment, though. Take a look at that top part of the account form and tell us about how that information gets completed.
Sure. So the top part of the form is the administrative information of the filing. And what you have here is the court file number, so the reference number that the court officials could use to refer to the matter. You have the identity of the circuit court, so Fairfax County in this example. The name of the estate, that's usually the minor's name. If there's more than one minor, you would just put all the names of the minors. Their date of birth, whether or not the parent is alive, the type of the fiduciary, whether that's a guardian or a temporary guardian. And then finally, it's the mailing addresses and contact information of the fiduciaries. At the bottom there, you'll see you're going to check which account number you're filing. So if it's your first account, your second account, third, and so forth. Whether it's a final account, which you'll only do if the minor has turned 18 or has passed away. And then finally, the date range of the filing. So your first filing is going to be the first 4 months of your qualification, and then annual accountings thereafter.
Okay, so what's the whole purpose behind this particular form? Why are we filing this?
So this form, this is where a lot of people get tripped up on, is when they're filing the accounting. You're filing an itemized report of every transaction that took place while you were the guardian over the property for this minor. So every piece of interest, every expense that was paid, any kind of sale of any security, anything that happened with these assets gets itemized out, listed separately, and reported on through the entire period. So in the case of the first accounting, it's 4 months. The case of annual accounting, it's going to be 12 months of activity.
Okay, so the receipts and disbursements that we're going to report on this account, do they need to be supported by statements showing where we got them and what the value is?
Yeah, so this is the whole nother game from the inventory. In the inventory, when we filed it, we didn't have to substantiate it at all. We just gave our word that it was correct. Now that we're in the accounting phase, we're filing accountings. We have to substantiate everything that happens on this accounting. We have to show bank statements, brokerage statements. We have to show canceled checks for any expenses. We have to show bills of sale for any sale of any property. We have to show everything that happened, itemize it out, substantiate it with supporting documentation.
Okay, so the account form is 2 lines over two lines that need to be completed, covering 2 pages. Okay, so and there's some totals that take place along that we total along the way, and these things have to be equal out. But let's talk about at the beginning. The first part on line 1 is the beginning assets. So what's reported here?
If this is your first accounting that you're filing, you're going to report the asset values from parts 1 and 2 of the inventory. If it's your second or subsequent accounting, you're going to show the carrying value of the assets from the last filing.
And now, I want to stress this, do we have to have any supporting documentation for the assets reported on line 1?
For line 1, the support is typically going to be, does it match the inventory. That's what the auditor is going to do. They're going to look at line one and say, is this the first accounting? Does line parts 1 and 2 match the values of parts 1 and 2 of the inventory, match this line here on the accounting? If yes, then you're good. If not, you got a problem and you have to figure that out. But there's no substantiation for this one. It's just going to be the inventory that was approved that shows that.
Okay, let's look at line 2. You know, we talk about receipts. Okay, so what gets reported on line 2?
So you want to think of receipts as anything that's received into the guardianship. And what that means is it's any sort of income that comes in. So it's interest, it's dividends, it's refunds, it's anything that comes into the guardianship or money that's income rather that's generated by the assets of the guardianship. You're going to report all of that in line 2.
Okay, but the receipts could be additional assets that are discovered too, correct?
For additional assets that are discovered, I would typically not put them in receipts. I would put them separately under adjustments. We can get into adjustments too.
Okay.
But if you're receiving, if you found a stock that you didn't have before, you'd probably put that in adjustments. If you're receiving some stock split or something like that, I would put that in receipts.
But the receipts we receive, are those generally going to be income, or could it be income and non-income?
It could be income and non-income. It could just be anything. It could be income generated from the assets. It could be refund checks. It could be payments from annuities or trusts or what have you. It could be anything that you're just receiving from an outside source.
So if I have a dividends, do I need to separately itemize all the dividends from stock A and all the interest from bond B?
Yeah, and this is where it gets tricky for many fiduciaries is you can't just subtotal and say we got this many dividends over the period. What you need to do is say, in January we received this dividend for $9.30, and it was for this many shares. And then for February we did this, in March we did this, and you need to go down every month and itemize every single security transaction that occurred.
Okay, and so to support that, then we have bank statements or broker statements that actually show those items being received. Is that going to be the type of documentation we would be looking for?
Correct. You're going to have a bank statement that shows we received this interest in this month. You're going to have brokerage statements to show all the dividend activity that's going on, all the long-term capital gains, and et cetera.
So if there's no activity in a particular month for a bank statement or a brokerage statement, do I need to include that statement still?
You want to include a full set of all your statements. Whether there's nothing happening, the money's just sitting there, it's not earning interest, you want to show that nothing happened, if nothing else.
Okay. Well, let's take a look at line 3. This is a line that gain on assets. So what are we talking about here as far as gains?
So one of the key parts of the accounting is the fact that there's this carrying value, and the carrying value is the value of your assets as of your date of qualification. So you think of your carrying value as your inventory value. That's your snapshot in time. We're drawing the line in the sand right there. If you sell an asset afterwards and you sell it for more than what you had on your inventory, you're going to record a gain. It's very important to understand that distinction because you might have a gain on this accounting, but it might be a loss, let's say, based on the true cost basis of the asset. So this is where it gets a little tricky for some folks because you want to make sure that when you're calculating the gain, it's the sales proceeds of the asset when you sold it versus the inventory value of that asset.
Okay, so I think the key thing is that the inventory value is not necessarily the cost of the asset for tax purposes.
Correct.
I think that seems to be the thing where people do get hung up. Now, what kind of documentation am I going to need to provide the commissioner to show the gain on a transaction?
So oftentimes you see gains with respect to stocks or securities. And so what you're going to show in that case is the brokerage statement showing the sales proceed and showing the date of the transaction. If you have something like a car that you sold or some kind of tangible property, anything else, you want to show the bill of sale. So you want to show any sort of documentation that records that this sale happened. Here's the sales proceeds. It's for this asset, and that matches what you're reporting on your gains on asset sales.
Okay. All right, let's take a look then. We'll go to line 4. This is called adjustments. So what goes on line 4? What is an adjustment that we should report?
So adjustments is kind of a catch-all category. And what you want to show here is let's say, you mentioned mulligans at the top. Let's say you had an incorrect value on your inventory. You might need to correct that. The adjustment is a section for you to do that. Let's say you found new assets. You want to record those new assets, not in the beginning assets line one. You want to show that they weren't part of the inventory, but we're bringing them in here. You want to do that under line 4. Any sort of change in an asset. So sometimes what I like to do is record an asset name change. So sometimes stocks change names and ticker symbols, and it's helpful to kind of record that here so that there's a documented record of where the name changed so people don't get confused. It's really a catch-all. It's the only place where you can have negative numbers. So everything else is positive numbers. This is the only section where you can show any negative value. But again, you're going to need to substantiate anything you're doing here.
So there is going to be supporting documentation required to prove whatever the value that's being reported here. That's what I take away from our conversation here.
Right. So if you need to change the value of something that was wrong, you had the wrong carrying value. You need to show why you have the right carrying value now, right?
Mm-hmm.
Like you need to show that statement as a qualification date and this to show that it needs to change. Important. I just want to make a clarifying comment. We're not talking about market value changes. So the market value changes don't get recorded on the accounting. Those get ignored completely. We're only talking about changes in the actual carrying value of the asset.
Okay, so this is a good spot to kind of, again, the inventory. A lot of times you may be going a little bit blind as far as the values you put down. So that gets us a total. We total up that particular number, and that's the number total for lines 1 through 4. So I think we go to page 2 of the account form, and then we get into disbursements. So line 5 is disbursements for administrative expenses. So what gets reported here?
Right. So there's 2 expense categories on the accounting for a minor. One of them is administrative expenses. And this is really anything that's associated with the administration of the guardianship. And that could be legal fees, that could be accounting fees, that filing fees to the commissioner's office or to the court. Any fiduciary compensation the guardian takes would be recorded here. Anything that's proper to the administration of the guardianship.
And we're writing checks. So tell us a little bit about the importance of getting of setting up your account at a bank that will actually produce copies of paid checks. Why is that important?
Right. So one of the hardest parts about doing accounting is the need to substantiate every transaction. In the case of a disbursement, the commissioner's office wants to see an image of the canceled check, which many people don't typically get in their normal lives. So what you want to do is, instead of collecting canceled checks when your accountings due, is set up a checking account at a bank that provides images of canceled checks as part of the monthly statements. Now you've got the statement and the canceled check all in one, and you're good to go. Your documentation issues just got halved.
Now, I've also seen that, though, that we also want to have the invoice that I paid to go with this accounting. Is that something you found to be true?
Yeah, that's correct. So you want to show the invoice to show that the expense was proper to the guardianship. So I'm not paying my own, pool cleaning bill with it. I'm paying, the bill that's true and proper to the guardianship of the minor.
Now, why do we have to state the purpose of every disbursement?
You want to explain, you want to tell a narrative with your accounting. So you want to explain, this is what you've done. Part of the responsibilities of the fiduciary is to marshal the assets and to pay any expenses related to this guardianship of the property. So you want to show, this is what we're doing, this is why we did it. It's all going to be audited by auditors. So they don't know your situation. You need to explain to them why it's happening so that they can understand and see why you made the expense that you made.
So as far as supporting documentation, if I write a check out and make a copy of it before I send it out, is that going to be acceptable to the commissioner for a support document?
No, that will be rejected. That's considered an image of an uncanceled check. Someone could discard it or overwrite, change the name, the payee. Stranger things like that have happened, So as an auditor, we saw all kinds of crazy things, and so to be safe and to have 100% certainty, the commissioner's office requires the canceled check, which you can only get from the institution.
So we talked about administrative expenses and paying for the CPA or paying for copies of this, that, or whatever, utility bills, maybe so on. But what about disbursements for the care of minor? What goes on this line, which is line 6?
Right, so this is going to be any expense that's proper to the care of the minor. And when you're talking about guardianship over property of a minor, it gets a little bit tricky. If there's a surviving parent, the surviving parent has an obligation to provide for that minor. So typically, you could just report that minor's share of groceries or utilities. That's considered part of the care of that minor. What you want to put here is if there is no surviving parent, or if the surviving parent is having difficulty making expenses, they can go to the commissioner's office and or to the court and get some approval for an expense. But overall, what we're talking about is an expense that's proper to the actual care of the minor. It's not an administrative expense, and you typically have gotten some prior approval to make that expenditure by the court or by the commissioner's office. So I think in the example we have here, it's orthodontia. So the child needed braces and got approval from the commissioner's office to pay for those braces.
Yeah, I think it's important to stress that if a parent is alive, that they do have obligations to support the child. And it is important to go to the commissioner's office and get permission if you're going to make disbursements. There's some little safe harbor window, but it's not very large. Okay, so if you don't do that and you get audited and you run into a problem, then you're going to find yourself either before the commissioner or over in the courthouse trying to explain that. Let's talk about line 7, losses on asset sales. I guess this juxtaposes the gain on asset sales, but tell us a little bit about what goes on line 7.
So yeah, it's exactly the same concept as the gain. If you have sold an asset of the guardianship and the sales proceeds is less than the carrying value for that asset, you would report that as a loss. So, that, and they would report it as a positive value too, by the way. So the absolute value of that difference gets reported on line 7.
Okay. Yeah, I think it's important. It can be a little confusing but we report it as a positive number. What about line 8 now? Let's talk about distributions. What goes on line 8? What constitutes a distribution to a beneficiary?
So a distribution in this case really only happens in 2 examples. It's the minor has turned 18 and the guardianship comes to an end, and now you're giving all of the property over to the minor, or you've resigned and now someone else is taking over and you're showing a distribution to the successor fiduciary. A third case could be, not to get too morbid, but if the minor passes away, you would show a distribution to the estate of the minor.
Okay. Okay, so again, in this case here, with the distribution, we need something to support that. So it's either a canceled check. If the minor is under the age of 18, they can't really sign a receipt per se, but maybe their guardian of their person could.
So if they're turned 18, the minor actually has to fill out what's called a minor's affidavit. So the minor is signing an affidavit acknowledging receipt, and that gets notarized and shows that they're now 18. They've now received all of the property. And the other 2 examples, you would produce receipts from the successor fiduciaries or whatever fiduciary is taking control over.
Okay. All right, let's talk about line 9. These are assets on hand, and it's at carrying value. So tell us a little bit about what goes on line 9.
So you think of line 9 as almost a new inventory. It's basically the new snapshot of your assets as of the end of your covering period. So in this example, it's your first accounting. It's 4 months from your qualification date. So 4 months from your qualification date, what are those assets worth? You're going to show the carrying value, which again is the inventory value. The inventory value stays the same. It gets adjusted based on all the activity that you've already reported on the other schedules. And then you're also going to show the market value. You're going to show the current value, the fair market value for all the assets, and you'll get those from the statements themselves too.
Okay. Now, the importance of market value, can you explain why that's important?
This is critical for establishing the bond and making sure that the bond is adequate. Auditors are going to review your market value. They're going to review the bond. They're going to look at them, compare them, and they're going to say, is this bond adequate to cover the assets in case of some issue. If it's not, they're going to send you a letter. They're going to ask you to raise that bond. And also, conversely, if assets have lost value, if your bond is too high, you can talk about getting a reduction in the bond and making a case there.
Okay. The next screen we talk about, though, in the next part of the form is called the certificate of accuracy. So tell us a little bit about what we're going to be. We're signing off on this particular account. What are we certifying to?
So this is going to be an original signature. You're going to sign it blue ink, so there's no confusion. And you're going to say that the accounting that you prepared, that you're filing, is a true and accurate statement of all the activity that you've overseen as guardian over this minor's property. So this is basically your testament that this is true and accurate, and you're going to file that with the commissioner's office.
Okay. So they're also going to post up on the screen here the completed accounting, which is page 1 and page 2. So you'll notice as you look at that, the totals on page 1 has to equal the totals on page 2. And if it doesn't, then we're going to have a problem. Is that true?
That's true. If your accounting's out of balance, it will be rejected. The auditor will cite that as exception, and they'll tell you to go fix it. So if you have a lot of assets, this can get a little unwieldy trying to keep track of all the different carrying values.
Absolutely. Let's talk a little bit about some common auditor issues to avoid in dealing with accounts for minors.
So one of the things that we just talked about was the fact that it's out of balance. So if it doesn't, the first thing they look at is the math on the accounting. If the math doesn't work, that's an exception. You have to amend and redo it. With a minor, with an accounting in general, you might see poor itemization or lack of detail when you're trying to show the different schedules. Some people might get tempted just to report subtotals of how much interest and dividends they received because that might be available on the statement, save some hassle. That's going to get kicked back and you're going to be asked to redo it. For minors specifically, there could be some confusion over what's considered administrative expense and what's care of the minor. So there might be some guardians that might be tempted to say, well, I'm also paying their other bills. Let me see if I could use these funds for this other expense. And without getting prior approval, they could run afoul of the court and the commissioner's office. So those are all big kind of broad watch outs to keep in mind when you're going through this.
So Brian, once the account is ready to be approved, all the exceptions that the auditors identified have been sorted out. Is there any other reason why the account cannot be approved?
So no, if there's no exceptions to the accounting by the auditor, if you have an issue with your bond, if your bond's out of whack, you could still get the accounting approved, but you will get a letter. So sometimes there's no exception to getting the accounting approved, but you might get some follow-on advice or counsel afterwards, post-approval, like, hey, you need to raise your bond, and they'll notify the bond company of it. Or, hey, you made a typo, we fixed it for you, FYI, when you file the next accounting. So stuff like that could happen, but they wouldn't prevent approval of the accounting.
Okay. Well, I think we're nearing the end of the show here. How about some final thoughts, suggestions, words of caution, pitfalls to avoid that you'd want to share with our viewers before we wrap this particular show up?
Sure. I think for any guardian that's preparing an accounting for a guardianship that they're overseeing, I would just counsel them to keep good records going into it. When you get back to filing the accounting and it's 4 months later, now you have to dig up old receipts and old checks. And by the way, you're up against a deadline. That can get a little stressful and a little hectic. So the more you do up front to keep organized, it can take good records, have a filing system, the easier your accounting process is going to be, and the smoother it's going to be when you're interacting with the commissioner's auditors.
Well, Brian, these are all great words of advice. I want to reiterate my appreciation to you and to your partner, Tim Grinnings, for all the support you guys have provided to the Probate Nation with the numerous shows you've done for us over the years, including this one as well. You've educated a lot of folks and helped them maybe avoid some of the pitfalls that often that cause them to not get the account approved or the inventory approved. So again, grateful for your support and for the great service you guys have extended to the folks in Northern Virginia. So thank you again.
Happy to do it, Richard. Have me back anytime.
I appreciate that. I'll take you up on that too. Well, for those of you inclined to prepare the guardianship account on your own, I think this show has provided you with some great guidance on how to do it properly. But as Brian pointed out in his closing remarks, one of the key responsibilities of the Commissioner of Accounts Office is to trust but verify. So do not ignore a letter from the Commissioner's Office telling you of an error on the account or a need for supporting documentation. You will be given a mulligan and time to fix whatever is the issue, but there are no mulligans for silence, and if your silence continues, you may end up being removed as guardian of the minor property. Should you find yourself baffled as to how to respond to the Commissioner, reach out to an estate attorney or accountant for guidance. You will be well served, and the Commissioner's Office will appreciate your diligence. So friends, this brings us to the conclusion of our show. Hope you found it helpful. Replays of shows can be viewed on the Probate Nation website and YouTube channel. And if you want to receive monthly estate administration and probate tips, please sign up for the free Probate Nation newsletter. Until next time, I am Richard Ruddy, and this is the Probate Nation.